Hello and welcome to On Watch by MarketWatch. I'm Jeremy Owens. Today, I want to start the show off with something a little different. What you're hearing right now is me in a Waymo Robotaxi. I want to take you along for the ride, literally, because it's one of the most unique tech experiences I've had this year. And it's the main topic of our show today. I'll explain how it works for me. I open up the Waymo One app here in San Francisco, choose a destination in the city, and a car just shows up. But it has a huge sensor set on top. And when I climb into the back seat of the car, there's no driver in the front seat. But it still just takes off. I go on a journey through the city and people are staring at me, like really and truly staring. I get why. It's very cool tech that still feels and looks futuristic, even though it's been in development for years. I've covered that development as a reporter, and it still amazes me. The Robotaxi can now do things that were just dreams of engineers in recent years, beyond just being able to drive, like giving me a warning as I get out of the car.
Scooter approaching.
This was a short ride, maybe 10 minutes, and then I'm out.
You're here. Please make sure it's clear before exiting.
If you get a chance to ride in one of these, and you might, they're already in Phoenix and LA as well, and they're rolling out in other cities, you might have a different experience. And that's because the final business model for Waymo is still in flux. Meanwhile, Tesla chief executive Elon Musk continues to push the idea that the cars his company is selling to consumers will become robotaxis. But the rest of the car industry seems to be running away from this business completely. Last week, GM said it was walking away from the driverless ride-hailing service Cruise, in which it had dumped billions of dollars. Ford also walked away from a big investment into autonomous technology when it closed its company Argo AI in 2022. But while most automakers are walking away, I still believe in autonomous driving. I think it's the most important proof of concept for the current generation of artificial intelligence. So I really wanted to dive into where we are with autonomous driving, including the AI and the business models that fuel it. And who better to talk about that than the hosts of the Autonocast? It's a podcast specifically about the development of autonomous driving, and it's hosted by Alex Roy, Ed Niedermeyer, and Kirsten Korosec, three experts on the topic. Let's get started.
There was so much focus and hype, if you remember back in like 2015, 2016, around the promise of the technology, and that was the focus. But no one really thought, at least my opinion is, no one really thought through the business model.
That's Kirsten Korosec, Autonocast host and transportation editor at TechCrunch. She talked about the difference between where we were for the past decade with robotaxis and where we are now, with cars operating without humans in the front seat.
I think that's why you've seen other automakers and other companies that have invested in these startups kind of pull funding, because all of a sudden the technology has gone from like, oh, not just testing, but hey, we can pull a human safety driver from behind the wheel. But what's the business model?
This question of the business model is still being worked out, but one thing is key here. Car makers are pulling out of the robotaxi business, but they're still developing advanced driver assistance systems for the cars they do sell. And that's the first place we need to start, the difference between the autonomous driving capabilities that may be in a car you own now and what is powering robotaxis. In separating those in your mind, think about different levels of autonomy. There are 5 of them, with the absolute top, level 5, meaning a car that can drive on its own, anywhere, anytime, in any condition. And I want to be clear here right now, there are no level 5 systems operating in the wild. So a Waymo Robotaxi would be a level 4 vehicle, while any systems in a car you own, including a Tesla, are considered level 2. How can you tell the difference? Well, the Autonocast has a test.
The easiest way, Alex always says this, he's like, can you go and sleep in your vehicle?
The Alex that Kirsten is referring to is her co-host, Alex Roy, who is also a general partner at New Industry VC and previously worked at Ford's Argo AI. And he joined this conversation from his Tesla.
The question is really, can it operate driverlessly? Yes, no. Everything else is Word games.
That is, can the car actually drive itself? That's what GM was investing in with Cruise and Ford with its now defunct Argo.
The thing that's been interesting is that all of these companies like GM, Ford, were also pursuing by either acquiring startups or investing in them that Robotaxi model. And then all of them have kind of shifted back now to kind of what Tesla has always wanted to do, which is incremental improvements to advanced driver assistance systems to eventually be full self-driving, which no one's at right now. So GM, Ford, like now they are thinking of it as, hey, we're not going to do Robotaxi business model. Now we're going to continue to get this better. And then eventually you might have a personal autonomous vehicle. That's at least how I think about it. I know Alex has like big opinions about this though.
Fundamentally, a vehicle is driverless or it's not. There's no robotaxi business if it's not a driverless, capable vehicle. And a personal autonomous vehicle is no better than driver assistance if you can't send it with no one in it to go get your child from school or do something for you.
There are no driverless cars available for consumers to purchase. And when you will be able to buy a driverless car is a giant question mark. In the meantime, lots of car makers are dropping their investments in the technology. Ed Niedermeyer, the third host of the Autonocast and author of Ludicrous, the unvarnished story of Tesla Motors, says it's because of the robotaxi business itself.
Fundamentally, that business is about using as few vehicles as possible, and there's just no requirement to build lots and lots of cars, right? Contrast that with the auto industry, where fundamentally it's a business built on scale.
Automakers have been focusing on advanced driver assistance systems, known as ADAS, which are level 2 systems. They help you maintain and change lanes on the highway and include products like automatic braking systems.
And so you see there, the driver assistance systems are a way for them to sort of add a little bit of profit without sort of fundamentally changing their business model away from one in which the primary goal is to always sell more and more and more vehicles. And so I think this is why there was sort of this idea that, you know, automating the car was something that would sort of be so profoundly disruptive to the auto industry that the car companies had to sort of get into this level 4 business. But that really hasn't happened. Instead, you're seeing, you know, driver assistance be a much better business in the near term. And I think the really interesting question that we're facing is sort of at what point, you know, does that crossover happen? And these level 4 companies, you know, which with their backers in tech now rather than auto, really start to impact actual demand for cars. And it looks like that could still be a long ways off.
Kirsten, what do you think?
I think one of the factors that needs to really be addressed here is that capital matters. And we used to, even if I look back at my previous coverage, I even used to do this. I talked about it as a race. And that was really equated in terms of speed to market. I would say it's still a race, but it's really about how long can you go with developing this technology and allowing your money to last and convincing your backers to keep backing you. And so I think that you see what happened to Argo, for instance, and Cruise most recently are companies that kind of looked at the capital needs and realized, I'm going to have to invest a couple more $1 billion for this to even become potentially commercialized. I'm just not ready to commit. And so we've seen that sort of consolidation happening in the market over the last couple of years because of that. When you look at Waymo and then you look at Zoox, they're both well positioned because they have pretty deep pockets, Alphabet for Waymo and Amazon. But the others, you know, these are automakers that at the end of the day have to make revenue in some way. And I think that they look at things like Cruise or Argo and they just realize how much more money they're going to have to put into this in order to become a commercialized, profitable business. And they're like, no.
Yeah, the cost of this is a huge issue, but it's also issues some of these companies have had. I mean, GM sunset its Cruise business and yeah, billions of dollars, but they also had some other problems. There was a horrible incident in San Francisco with Cruise in which a Robotaxi trapped a woman underneath it and injured her badly. And so it looks like in the end, we are really looking at Waymo, and then if Tesla can pull a miracle, what other companies are there that are still competing in this?
But to be fair, Zoox is a stalking horse in all this because they're backed by Amazon. They have great technology, and we've seen very little from them. They've been incredibly cautious and quiet, which is a rare combination. I, I have to say, though, that there are still other stalking horses here. Mobileye, which is one of the largest vendors of driver assistance in the world, has promised for many years to ladder up to level 4 driverless capability someday. And they have been showing for 5 years extraordinarily impressive videos of operation in multiple cities around the world, and they don't get enough coverage of that capability.
And Americans don't really see the progress that Mobileye is making because they're doing it in Israel and Japan. They're an Israeli company, and it's just not a big consumer name, especially now that it's spun off from Intel.
The other one is Wave, which is a British company that is also developing driver assistance and eventually level 4. And eventually that'll be competing in both the privately owned vehicles and robotaxi business at a later date with phases in between. But I have to say this. The end of Cruise and the end of Argo are very different because Argo was very cautious in marketing itself, but the technology was quite good. Whereas Cruise had a fundamental structural problem, which was they were not nearly as cautious as anyone else that big or backed that with that much money. And I'm not sure they could have survived even if GM had committed financially because of structural and technical issues. These are things that Waymo has executed perfectly.
Yeah, I think to echo what Alex is saying here, we have a couple of examples. Cruise is the latest, but I think if you look at Uber's ATG, Advanced Technology Group, you had huge amounts of money going into that. You had huge amounts of talent. They had everything going for them. What both of these cases sort of prove is that in a lot of technologies, it really is a rush to sort of first mover, right? Who can be the first out there? Who can be collecting the most data? Who can be the most aggressive? And I think, what we've learned over the years from multiple examples, this is a technology where it's really, in a lot of ways, it's like one mistake can take billions and billions of dollars, if not tens of billions of dollars of investment, and kind of throw it out the window. And it's because this is fundamentally a trust business. You are fundamentally asking people to trust their lives to your technology. At the point that the driver, the human behind the wheel, is legally responsible for what happens in that vehicle, it's because the system is not safer than them. I think at some point the question here is, what is the value and what is that worth? Because if there's no safety benefit, then the question of what people are paying for and what it's worth continues to be one that is not super well defined.
We're going to take a quick break. Coming up, more on Tesla, Waymo, and the AI that will drive them. Welcome back. Before the break, we talked about how most car makers have dropped their efforts toward robotaxi services. The big exception? Tesla. Elon Musk has made autonomy and robotaxis the selling point for his stock in the past year, even as he struggles to show off anything close to Waymo's success. So I wanted the Autonocast experts to jump into that race.
And it's important to emphasize, Waymo is burning like $2 billion a year, whereas a company like Tesla is making money, again, kind of selling a simulacrum of that self-driving, something that looks like it but doesn't actually deliver those safety and efficiency benefits that a real robot driver gets.
That's Ed Niedermeyer again.
Creating robot drivers is a very, very, very difficult technological task. The robotaxis that are on the road today, that are operating driverlessly, we have pretty good safety data around them. Certainly Waymo has done a great job of disclosing lots of safety data about their systems. These sort of have a halo effect for sort of all driving automation. And it's easy to sort of assume that anything that kind of looks like it's self-driving is sort of created equal. And the reality is that the hundreds of thousands of dollars of sensors that it takes to make a Waymo work and the limited operating domain are really fundamentally different than, what works in the auto industry, where you have to be able to sell people a car that they can afford that they then can take sort of anywhere. There was sort of this idea that automating the car was something that would sort of be so profoundly disruptive to the auto industry that the car companies had to sort of get into this level 4 business, but that really hasn't happened. Instead, you're seeing driver assistance be a much better business in the near term. And I think the really interesting question that we're facing is sort of at what point does that crossover happen and these level 4 companies, with their backers in tech now rather than auto, really start to impact actual demand for cars. It looks like that could still be a long ways off.
Yeah, it looks like a long way off from owning an autonomous car, but that's not what Elon Musk says, Ed. And this is where I want to bring Tesla into this discussion and really balance it against the careful, deliberate approach Waymo has made with the bombastic approach that Tesla has taken, constantly promising autonomy will be here the next year for almost a decade now. Because I get a feeling from the investment side, from Wall Street, that they see this as a two-company race right now. This is between Waymo, which is owned by Google, and Tesla. And so, when we're discussing Tesla, I want to ground it in reality. Tesla cars only have cameras. If you look at a Waymo Robotaxi, you'll see a lot more than just cameras. There's a gigantic sensor system on the top with LiDAR and radar and this other stuff that can see what a camera can't see. But right now, the Teslas like the one you're sitting in, Alex, they only have cameras, and we do not have autonomous systems that can operate safely with just cameras, right?
Well, as a former executive at Argo AI, I would argue that if I would have bet my life on it or my daughter's life, I would like to have as many sensors as possible, running the best possible AI and using maximal information to make safe decisions. That being said, I also believe it is possible to deploy a camera only or camera first system. However, the best AI behind a camera only system is still going to have limitations as to what it can do versus a system with more modalities. So if a car can see in the dark with no headlights or lose a sensor or two and still get you to the side of the road safely, that's the car I want to be in. And that is more likely to occur in the near and midterm in a multi-sensor vehicle.
Ed, what's on your mind?
I think it's really appealing to investors because it's rooted in sort of what I see as the key fallacy of the sort of self-driving car myth, which is that cars are this platform, this universal interface for interacting with the world. And if you can just automate that, then it's like you become, in a way, like you become to the real world what Google is to the internet, right? You become that gatekeeper of how people move around the physical world in the way that Google has in the virtual world. But it's going to take a lot of time and money and talent and work to get to the point that it needs to be profitable versus, frankly, something that is much more like gambling than investing. And I think that Tesla really characterizes that second approach.
Yeah, and Waymo seems farther along in robotaxis, but they still seem very unsure of the business model, guys. Like in San Francisco, where I am, I use the Waymo One app to call a Waymo, and it's all through them. They handle it all, right? But when they start operating in Atlanta, it's going to be only on the Uber app. And in some cities, you can get a Waymo on Uber or on Waymo in the current plan. And they're also partnering with others, including Move, which is a fleet management system. So they're still figuring out how to run this business, and we can't know what the profit profile or really the financial profile is going to look like until they kind of settle exactly how this is going to work.
Yeah, it does feel like Waymo is very much testing the business model now. And I do think that the company outsourcing or partnering with Move, which is an African mobility fintech company, is super interesting to me because it's an indicator that perhaps Waymo does not want to be the operator of these fleets and eventually sees a world in which it is pushing that off and not dealing with that very expensive operation.
You know, a lot of people have gone badly wrong in this space by sort of jumping to what the ultimate sort of use case and end state will be. The reality is that this is a technology that has taken a lot longer and involves a lot more sort of ups and downs and sort of side journeys than sort of a lot of people initially expected. And I think one of the really interesting things that's happening in the short term is that, you know, these companies were very hesitant to admit that novelty played any role in the marketing of these vehicles, right? They wanted to be taken seriously as, you know, we are building drivers that will automate any kind of driving. What's emerged in the near term, certainly in San Francisco, is these Waymos are a tourist attraction, and there is a novelty factor to it. If you ride a Waymo in San Francisco, it is one of the most amazing technological experiences that you can have. And we live in a time when people literally kind of worship technology. It's kind of crazy to assume that there isn't going to be a pretty healthy, actually, sort of novelty market in the near term. And so I think that's something you can expect. How long that lasts, how long it takes for the technology to mature to the point where it really is more ubiquitous and it's automating all kinds of driving and it just sort of fades into the background is an interesting question. But I think we shouldn't just leap immediately to that endpoint because these things take time. And that's what we've seen so far.
I think what we're seeing is one area, Phoenix in particular, where we're starting to see that novelty fade away a little bit. And what I'm talking about is Waymo, specifically them giving rides to the airport. And now that they've unlocked that, granted, it's still on surface streets. So it's not quite the utility it needs to be, but they're getting ready to go on the freeways. They've been testing on the freeways actually right now. And I believe in 2025, they're going to start using freeways. Once that happens, then this becomes something that is a true benefit and utility to users. Once this freeway system is unlocked, I think we're going to start to see that novelty fade away and it really becomes sort of a useful device for consumers.
I wanted to end that interview right there at a useful device for consumers, because that's been my struggle with generative AI during the last 2 years of a hype cycle for it. I just don't see how useful generative AI is going to be broadly for consumers in the near term. But when I take a Robotaxi, I believe this is going to be the killer app of AI for this generation. And if you don't know the term killer app, it means the experience that convinces a new generation of the usefulness of a technology. Think of web browsers for the internet. They were what taught us how we can use the internet. Think of the App Store for the iPhone. And to me, when I take a Robotaxi, I see the potential of AI. I believe that autonomous driving, and especially Robotaxi services, are going to be that consumer service that shows what AI can do. We still don't know what that means from a business perspective, if Google and Waymo are going to be able to turn this into a profitable business. But I do know that in a race against Tesla, Tesla is still promising autonomy while Waymo is delivering it. Before we go, it's time for What We're Watching, a look at the news you need to know for the rest of the week and beyond. The Federal Reserve shaved another quarter point off its benchmark interest rates on Wednesday, but the more important information was its outlook for the new year. The Federal Reserve Board now expects to cut 2 times more in 2025, which is less than what Wall Street was expecting. And that's because they see inflation staying stubbornly higher. They don't believe it'll reach their 2% goal until 2027 at this point. Meanwhile, the labor market isn't as much of a concern. They expect unemployment to stay about the same as where it is now in the new year. Now, as we've discussed, the Federal Reserve really made the interest rate cuts at the end of 2024 because of concerns about the labor market and thoughts that inflation had cooled. Now it seems they could be moving their focus back to inflation. Congress faces another deadline for funding the federal government, and that deadline is Friday, December 20th. Now, there is a bill floating around Congress that would at least push that deadline off to March 14th and fund the government until then, but a lot of other goodies are getting stuffed into that bill, including right now a pay raise for the members of Congress who are voting on it. There will be a lot of debate about this bill, so make sure to follow MarketWatch.com for updates. And that's it for this episode. To keep following the latest financial news, head to MarketWatch.com. Have questions about the news and the economy? We want to hear them. You can reach us at onwatch@marketwatch.com. You can subscribe to the show wherever you get your podcasts, and please do. If you like what you heard, please leave us a rating or review. It really helps others discover the show. The show is hosted by me, Jeremy Owens, and produced by Alexis Moore. Isaac Gaines mixed this episode. Melissa Haggerty is the executive producer. We'll be back next week with a new episode, and until then, we'll be watching.